Why does everyone on social media keep talking about hitting the first 1 crore rupees in financial assets? This is what we are going to talk about today, and I'm going to explain you why does your wealth explode after 1 crore and why is it a very important milestone. Folks, welcome to the channel. My name is Niraj and I'm a partner at Holistic Prime Wealth. We help people like you manage their investments, hit their first crore, take care of their insurances, plan their taxes, file their taxes, plan their credit cards, and a lot more. So, if you're looking for something comprehensive, do reach out. So, guys, today we are going to break the video into three parts. Why hitting the first crore is very, very important. The second part is going to be some common mistakes that you should avoid. And then, lastly, we will discuss a lot of strategies that you can use to accelerate your wealth after you hit that 1 crore goal. So, guys, why is it that 1 crore is very, very important? You may take 5 years, 10 years to hit that 1 crore goal, but do you know how easy and fast it becomes to hit the next crore? So when you hit your first 1 crore, okay, which is like the 100% of the amount, but what about the next crore? It's another 100%. Okay, so 1 crore to 2 crores is a 100% gain, 2 crores to 3 crores is a 50% gain, and 3 crores to 4 crores is a 25% gain. So adding that extra 1 crore after hitting the first crore is becomes very easy and faster. Let me take a better example. So let's say that you can earn 12% on your investments. If you just have 10 lakh rupees, okay, going from 10 lakhs to 20 lakhs can take you 6 years. Okay, but if you have 1 crore rupees, in the same 6 years you can go from 1 crore to 2 crores, and then in another 6 years you can go from 2 crores to 4 crores. So that's how faster compounding becomes. But there is another thing that a lot of people miss. They only consider the returns that they generate on their corpus. What about the principal that you will add? So once you have hit the 1 crore, okay, and you are able to save 1 lakh rupees per month, you will hit your second crore much faster than 6 years. Okay, because not only the 1 crore will earn you 12% return, you will be adding another 12% from your own pocket. So you will hit your 1 crore in under 3 years only. So from 1 to 2 crores you can go there in 3 years, because 12 lakh rupees per year will be the contribution from your own pocket, and then 12 lakh rupees per year will be the income that you will generate on your corpus. So 24% per year. This is something which a lot of people miss. I hope you got it. So focus on hitting that 1 crore first, and then as much money you can invest after that, and you earn a reasonable rate of return. Your second crore and third crore will come very fast, and going from 1 crore to 10 crores or 20 crores or 50 and 100 crores will become an easier journey. Obviously, it will depend on a lot of factors. Firstly, how much money you earn, how much money you save, what is the time horizon you have, for your money to be able to grow, and a lot more. So it's not easy, guys, but hitting the first crore becomes very important, because you will see that you become more relaxed after hitting that 1 crore. So a lot of people, once they hit that 1 crore mark, make a lot of mistakes. The major mistake that I have seen most people make is, once you've accumulated a pot of money, you will immediately go and buy a piece of real estate. It may not be a primary home, it can be a second home, it can be, a land and so on, right? People end up buying a piece of real estate which may or may not give returns, which they don't even know anything about, which could get encroached. They will pay brokerages on that, they'll pay stamp duty on it. So after factoring in everything, you will end up with barely any return. And not only this, if you have 1 crore rupees and if you want to spend 2 lakh rupees from that, which is 2%, you can withdraw that 2% and spend it. But you can't do that once you've bought real estate, right? You have to sell the entire piece. You can't sell a bathroom and use the 2 lakh rupees. That's not possible. So this is the major downside of real estate, and this is a major mistake that I've seen people making, immediately going and buying real estate, especially when your compounding journey is kicking in. Then once you have set aside a capital, once you have accumulated a capital, second mistake that people make is start taking more risk with the money. Start buying small cap and micro cap stocks, start buying SME stocks. They're trading in F&O. They think that they can compound their capital faster. You don't have to do all these things. You have to follow very very simple rules and processes which we are going to discuss later to let your let your wealth compound, and you can focus on your core job, which is your own income and generating machine. So you focus on your cash generating machine and let the investments do the work for you. So what are some of the strategies which you can use to accelerate your growth after you hit that 1 crore rupees? Firstly, you need to have allocation to equity as an asset class, right? You definitely need exposure to equity, and my recommendation is to do it through mutual funds. Okay, guys, think about it. Fixed income will give you 7% rate of return, and if you put your money in fixed deposits, you also have to pay taxes, especially when you're earning money. Real estate also is a 0 and 1 game, guys. You will buy one piece of real estate, okay, and you will hope that that one specific piece will give you the returns that you seek and desire. But that's not the case with mutual funds. When you buy a mutual fund, you're buying a portfolio of 30 to 50 stocks or 30 to 100 stocks. Some will do well, some will not do well, but they will give you the average returns that you need. So mutual funds should become a core part of your portfolio, and that's what we help our clients do as well. Diversification is also important. Diversify your investments mainly in equities, but then you should have your emergency fund. You should maybe allocate some to multi-asset funds and so on. Again, diversification becomes not very important at 1 crore, but as your 1 crore becomes 2 to 5 crores, then diversification becomes more important, right? So as you keep hitting higher goals, diversification starts playing a better role. Don't forget, guys, to have your health insurances and term insurances in place. Okay, you don't want to disrupt this compounding journey. The cost of having a health insurance may be 20,000 rupees to 50,000 rupees per year. That is the insurance of your portfolio as well. Make sure that you have a health insurance and also a term insurance for your family members. Focus on increasing your savings rate. Obviously at 1 crore you're earning a decent amount of money as well. So if you're able to earn 2 lakh rupees in hand per month, and you can save 1 lakh rupees per month, like I said initially in the beginning of the example, that will add 12% to your corpus itself, right? And not only this, you are also adding 1 month worth of expenses which you can use in the future, and if it grows at a rate higher than inflation, then this can be a lot more than 1 month. So focus on your savings rate. Don't get carried away and don't start spending recklessly. Focus on creating more sources of income. Okay, the first advice is probably to focus on your own source of income, which is your primary job or your primary business. If you think that you can do well and you are irreplaceable, you can grow your income at more than 10% rate of returns, then focus on your core primary job. But in case if you think that you are stuck in a dead end job, then start looking at something else, right? Maybe you have some skills which you can monetize. You can start a YouTube channel like I did, or you can start some course, right? You can do multiple things. All you have to see which project can help you create some income, and social media is probably a great place to learn and start selling as well. So you should definitely learn sales to fast track your growth. Ensure that you optimize your portfolio for taxes. Okay, so don't invest your money in tax leaking strategies like fixed deposits. Okay, stocks wherein high dividend yielding stocks wherein the dividend will hit your bank account and you have to pay taxes on that. Your company is only paying dividends to you, and a very high dividend to you, only because they don't have avenues to grow. So do not buy those kind of stocks. You're better off in a mutual fund, because in a mutual fund structure you do not pay taxes till you sell, which is very important, and people are not aware about it. So minimizing tax leakages from your investment portfolio is very important. Don't look at creating rental income. If you have 10, 20, 30 years of working life left, don't look at creating any income which hits your bank account on a monthly basis. You have to focus on investments which will grow. Mutual funds, national pension scheme, provident funds, these are great places to keep your money. Use loans smartly, guys. So I can do a different video on loans, but if you are somebody who has also a business, then you can take a lot of deductions if you are using your loan smartly. There is something called loan against mutual funds also that you can use. So instead of withdrawing from your portfolio, you can pledge your mutual funds and create an overdraft bucket, and this can be used as a strategic bucket where you use it for emergency expenses, or you can use it when a market crashes as well. So you have to use your loan strategically, and a lot more deductions are also available in the income tax when you use these loans strategically. So again, this will need a separate video. Comment comment and tell me if you want me to do a separate video on what are the different ways you can use loans to save taxes and also maximize your earnings, and we can probably think about it. Then you need a mindset, guys. You have to have a mindset of building that 10 crores, 50 crores and 100 crores net worth. There is a beautiful movie on YouTube called One Idiot. I think I urge all of you to watch that movie simply because a child who started investing from a very young age ended up with 100 crores worth of corpus, and he also ended up with a Rolls Royce, right? I will probably share the link of the video in the description box below, and I think you should all watch it because it will motivate you guys to earn a lot more and create that corpus. You may say that money is not important, or don't leave anything for your kids, but that's not how Indian families think. Your thinking, at your family level versus what you say on social media is different. I know that. So let's not, go more into discussing this thing. But at the end of the day, everybody wants to create wealth, and so do you. So focus on that. So lastly, understand the rule of 72, guys. Okay. If you can understand this beautiful rule of 72, then you can compound your wealth faster. So the rule of 72 basically says that how many number of years will you take to double your money. So say for example, your investments earn you 12% rate of return. 72 divided by the rate of return is the number of years it will take to double your money. So 72 divided by 12, 6 years. So if you have 1 crore today, so in the next 6 years, you will go to 2 crores. In 12 years, 2 will become 4. 18 years, 4 will become 8. 24 years, 8 will become 16. 30 years, 16 will become 32. Then 36 years, 32 will become 64. And 42 years, 64 will become 128. This does not include any contribution from your own pocket. If your contribution from your pocket is also there, then you can hit your 100 crores in under 40 years, probably in 25 to 30 years. Comment and tell me if you aspire to hit 100 crores or not, or you're just satisfied with 1 to 10 crore rupees. Thank you for watching, guys. Do let me know in the comment section what do you think about this video, and stay tuned for more videos.